Well, when should you be redeeming your mutual fund investments, if at all? So let me begin with that basic question to Arnav first. Arnav, there could be n number of reasons why your outflows were high in December, but is it safe to say that when markets are touching new highs, there will always be temptation to take some money off the table?
There is a tendency for people to do a little bit of profit booking, especially when markets show a sudden jump. Because if you see in December, there was one very important catalyst which happened, and that was the election results of the 5 states which came in. Now, following that, what you saw was a massive FII inflow, which normally doesn't happen in December. Normally, you find that December is like slightly less activity month as far as the institutions are concerned. And then in January, after the new allocations start coming in, things pick up. But because of this election result and what the market analyzed in terms of the impact on the Lok Sabha polls for 2024, you saw a massive change, one in terms of sentiment, two in terms of the ways the FIIs behaved. So that pushed the market up. And I presume that there is always see in some element of redemptions which will be coming in, but the sharp spike or the difference which you see in the month of December is probably due to the fact that a lot of investors also thought that I might as well do some profit booking, because this sudden rise is like an event which I need to cash on.
That's possible. That's possible. And maybe it was a good decision, maybe it was a bad decision. That's very individual. But having said that, Pankaj Matpal, let me come to you on that broad question that we're asking. Now, I'm sure you get a lot of questions. Should I redeem? And I'm hazarding a guess, but your standard answer must be, don't remove the money unless you absolutely need to. Should that be always the case? If you have been a patient and a disciplined investor and you see these kind of opportunities, should you then leave the entire portfolio untouched?
Now, exactly what you said, that if you don't need money, then don't redeem. That is what I believe in. Second thing, what Mr. Arnab said, I fully agree with him that this time, this looks like a profit booking only, no other reason. Usually we have seen when there is a rally or there is a crash in the market, in both the cases, investors start redeeming their funds. So this time it is a profit booking. But the question is that whether they should book profit or no. Tamanna, it is very simple answer. If you have set your financial goal and you are investing for that, so you should stay invested until you achieve that goal. Because if this kind of opportunities will definitely come on your way, but if you keep on booking profit from time to time, then it may delay in achieving your objective. See, if you feel that your portfolio has grown by 20%, 30%, and you are booking profit, then how your investment will double? So if you let it grow and it enjoys the benefit of power of compounding, then only you will be able to double or triple or multiply your wealth. Second thing, the question went to book profit or when to redeem units. See, one thing is very simple. If your investment is not uh, able to achieve your objective, or you realize at any point of time that you have invested in some schemes which are not as per your objective of investment, risk appetite, or your investment horizon, it is not matching with the investment scheme. That may be one reason that when you realize that this is not the right scheme or suitable scheme for you, you can redeem your investment. Second thing is that you invested for some goal, but in between there's an urgent need of money. That may be another reason you may redeem units, or there may be a reason that there may be a change in financial attribute of the scheme. In that case, also you may miss when you started investing. That time the scheme was suitable, but now you find that scheme is not suitable for you. You may decide to redeem at that point of time also. So that can be another reason. But otherwise, I believe that if your financial goal is aligned with your investment, you should stay invested. Or one important reason can be rebalancing portfolio. See, suppose you decided your allocation in equity and debt should be 50-50%, but because of this kind of rally, your allocation is now say 70%, 30%. In such case, also you can rebalance your portfolio. For that region, you will switch from equity to debt, or if required, from debt to equity. That can be another region. Otherwise, I believe that one should stay invested till the goal is achieved.
Okay, so stay invested till your goal is achieved. Don't get distracted with what happens in the interim. Arnab, what would you say to this question? What are the top 3 reasons which justify a redemption? And is what we saw in December one of them?
So the 3 top reasons which I feel is: 1, you need money for some purpose for which you do not have liquid cash. So at that point, instead of taking a loan or borrowing, it is always better to redeem. So look at the circumstances and then decide whether the expense that you need is important and it cannot be financed through, or it need not be financed through a loan. Second part is that when you need to rebalance your portfolio, because if you look at the markets, you see what has happened in this kind of rally. The small and the mid caps have run up at virtually 40-45% in a year. And it is very likely that most portfolios will be see some sort of imbalance as what it was initially constructed. So at that point of time, if you are rebalancing to ensure that both within asset classes, between equity, debt, gold, etc., you are rebalancing, or even within the equity portfolio, if you want to rebalance between various weightages by market cap, that is the second reason why you should do it. And the third and final reason is that your goal is achieved and you want to use the money for the specific goal. That is when you should be redeeming the money. Otherwise, the whole benefit of years-long investing, the point here is that the outflows which we have mentioned are going in from the folios where there is also a regular investing going on. So idea for regular investing is to slowly build your wealth and not rely on market timing. Now, if on the other side of the transaction, while you are trying to sell something, you are trying to rely on market timing, then it goes against the principle which you are following. So that is why one should be careful and have a specific reason for taking the money out.
So to explain it simply, if you need to take a